Well. It is Saturday, January 7th, 2023. Welcome to Charts and News. Please be sure to like and subscribe to the channel. Subscription is key, I'll tell you guys, and I'll tell you again, we're going to look into some great things in this video. Alright, first things first, we're going to look into oil. I was wrong about oil. That's fine. We'll look into what I did wrong and fix it for next time. We're going to look at natural gas, so energy as a whole, because natural gas has been falling off of a cliff, and there's some possibilities for big profits here, guys. Be greedy when everyone else is fearful. That is Warren Buffett quote. We're going to look at the bond market. Okay, I told you guys to go long on bonds before this extensive rally that brought yields down 15 basis points in a day. And the stock market, and why I also think that the stock market is currently in a bull trap. If not a bull trap, they might give you another 2-3%, but I believe the stock market is in a bull trap. So first we're going to start off with oil, because that's what we have right in front of us right now. So I went long around $77. I averaged it down to like 76. However, I was wrong, and I might have to stop out of the position at around on Monday. We get a short signal here and a red MACD. It's not looking pretty. It's really not. But I don't want to stop out because I still think if I just waited out for like a month, it could go back, and I have money to play with because I succeeded on my silver trade. If you guys remember, made good profits on that trade because you win some, you lose some. And I like to not put all my eggs in one basket, right? So I tried to go with crude too. Didn't play out well, but I could average down, or I could just take the stop loss. Depends on how you do your risk management. It depends on your strategy. But we could definitely see crude hit this $70 range again, and it could even go lower. It's below the 200-day moving average, so you're expecting bearish momentum. So yeah, it might test this trend line. Who knows, guys? Just keep an eye on crude, but that's not a big deal. Natural gas is insane. Is insane, guys. So yeah, this is kind of bullish divergence. Look, the RSI is going up as the price fell down a cliff. But why am I looking at this? I've said before, guys, like, okay, first of all, this is a heavy support for natural gas. Look, okay, it was heavy support in this area. It's heavy support right now. We'll see how it acts. And look, I don't want you guys to get in natural gas right now. You're catching a falling knife because it could keep going down. So just wait. If you got to get it here to see a green MACD and a long signal, that's much better risk management than just buying it right now, because it's a falling knife right now. This is not who wants to buy right now. Looks like it's just going to keep going down. But don't worry, guys, because if you get in at the right time, look at this. Okay, and this is no leverage. This is just regular natural gas. Let's say it just goes back to around $5. You would get, look at that, 40% gains. Now let's look at it with a leverage ETF. BOIL will be the ETF that I'm using. And this doesn't have futures, so you see the gaps. There's gaps that have to be filled. When they'll be filled, I don't know. But the RSI is extremely oversold. So let's see. Let's see what we get here. Okay. Price range. Let's imagine we fill up that this gap over here, okay? So right now it's at $12. That would be a 172% gain, guys. Look, we're not trying to hit home runs here. This is risky. This is very risky. Just whatever you put into this position, if you want to play this position, make sure you're ready to lose every single dime, because there's a chance that happens, because natural gas is cratering. But it's something that I'm looking at because the potential risk to reward ratio is attractive to me. The 172% possible reward on a very oversold stock. Even, look, personally, I wouldn't wait until it hits there. I would probably go until here. That's still a 73% gain, guys. That's amazing. In my opinion, that's amazing. Told you guys to go long on bonds. This is the bond yield. It's down. I wouldn't go long right now because it's back in this range, and there's a good chance it just shoots right back up. Neutral right now. Even though the MACD just turned red and we got a short signal over here. I'm not going to be monitoring this, like making sure I can get in on a good position. Whatever happens, happens. There's a good chance it keeps going down though, because there's nothing that the government wants more than yields to be down for bonds. Guys, they will choose hyperinflation and your cost of living going up and losing votes before they let this thing implode. They will not let the bond market go, because if they do, they're toast, and there's nothing they can do about it except print more money, which is why they'll always pick hyperinflation. Bonds are I like bonds as an investment, if I'm being honest. Dow Jones. So I'm going to get into why I think this is a bull trap. First things first, not like many people use it, but I use it, and I think it's pretty reliable. But the QQE signals hasn't showed me a long signal yet. Or maybe it has. No, it hasn't. Okay. Hasn't showed me a long signal. Cool. MACD has not flipped over yet. Cool. It hasn't, December 15th, the high for the Dow has not been broken yet. So in my opinion, it's still in this jaw block. Okay. So I need to see that being broken, which would probably lead to this turning long and that being a green MACD. That is good confirmation. Right now, we just had a big green day. Let's see what the NASDAQ's looking like. Same thing, kind of, right? Like, okay, this is December 22nd day. And January 3rd, it hasn't broken those highs. So the NASDAQ is still in this jaw block. And it hasn't confirmed anything. We still have a red MACD. We still have a short signal here. I see no reason to go long just yet. Not yet. And look, it's still below the 30-day moving average. I believe the Dow was testing it. Yeah, the Dow is testing the 30-day moving average. So we got to wait for Monday. Plus, on Thursday, we have CPI day, and that could just destroy every signal you see, right? So don't get too excited yet, guys. SPX, same thing. We have it's definitely above the chop block, but like not enough to confirm that it's not a fake. Still a short signal and still a red MACD. Keep an eye on these indexes, guys. I think SPX is the most reliable when it comes to technicals. I think that's what most traders and institutions follow. So yeah, we're keeping an eye on this. It's the weekend, so take it off. Enjoy yourselves. Watch some charts and news from our Saba, and that's it. And another confirmation is Apple. Apple has not gone above this 129 level. That is very important. So $129.04. I mean, it's above it, but like it's not above it enough. We still have short and we still have a red MACD. So do not go long, guys. This is screaming bull trap to me. But if it goes up, if it goes up on Monday, like significantly, like another 1 to 2%, all three indexes, then yeah, you're probably entering another bear market rally. But with how much room, right? Okay, because let's look at SPX here. SPX always tends to fail around the 200-day moving average or the trend line. Okay, so let's take a look at that. See, fails at the trend line, 200-day moving average, failed at the trend line, failed at the trend line. So how much room does it have? Well, let's find out. Okay, 200-day moving average, 2%. Not worth it, in my opinion. Even if Monday's green, I'm not going long. And the trend line is 3.6. So that's nothing that I'm going like crazy for. You guys just seen those gains I showed you on natural gas. This risk to reward ratio especially because we could be on the brink of capitulation. I have no desire to go long right now on these indexes. It's a bear market. We're below the 200-day moving average. Unless I see good short trades, I'm not doing anything with these. And plus, you know what? And there's a good chance that the institutions just bring it up here, 8% gain, and like make all these bears like short squeeze, like, oh my God, we're back in a bull market. I won't be doing that. I hold SQQQ and I'm going to continue to hold it until we capitulate. But I don't care. Like, if the institutions do that, good for you. I'm just going to buy SQQ at a cheaper price. But I'm not going long. They are not. Do not get trapped, guys. There is capitulation waiting, and it's going to happen. So let's hop on the news real quick. Lessons for the next war. Okay, so this isn't that big of a deal. I just thought it was funny because it's like this newspaper, journalist company, whatever, already knows that there's going to be another war. Like, they already know. It's like, yeah, there are lessons for the next war. Predictions about the future of war follow narratives and intellectual fashions. At the beginning of the millennium, the emergence of high-tech drones, the U.S. military's all-seeing eyes in Afghanistan. Whatever, this is all mainstream propaganda ministry. They make you believe that we need this stuff. All we need is unity and peace. Okay, guys, we can get along. But this is all greed and power and money. And I don't really see the point. Look, you wake up, you get a cup of coffee, you go enjoy the sunlight. That should be enough, okay? You don't need an empire. You don't need billions of dollars. But as humans, we never have enough, right? It's never enough. We always need more and more and more and more and more. And you'll never achieve any type of happiness with that mindset, guys, because there's always more to get, and there's always someone with more than you. So learn how to be content with what you got. Yesterday, the ISM actually, this is what sent markets up yesterday. Should have mentioned that. The ISM Manufacturing PMI came out for the month of December. And whenever this number is below 50, it indicates bad news for the economy, but economic bad news is good news for the markets now because it indicates that the rate hikes are working, and soon we're going to be able to lay off on the rate hikes. So we had 48.4, which is low. It's indicating that the economy is taking a hit. That's why the markets went up, even though they were initially down because unemployment was at like a record low, 3.5%. It went down. And markets were taking a hit because of that. Because they're like, oh, the rate hikes are too slow. They're not working. We're going to have to hike rates even more. Although I disagree with that. But anyways. I thought this would be interesting for you guys to look at. Look at this. February 2020, we had 50. December 2019 was 47.8. So around this time, we were experiencing economic headwinds, and it was like off of a couple like interest rate hikes. There was a tightening cycle going on. That's interesting because everything got saved by four stimulus rounds, which is suspicious to say the least. This chart right here should bring a bunch of suspect to what happened in February 2020, and you all know what I'm talking about. I don't want to say the word. And it's like, what are they going to come up with now? We already have a world war brewing. World wars create so much economic stimulus. If it wasn't for World War II, the U.S. wouldn't have gotten out of the Great Depression as soon as they did. This is concerning to me because they're going to use this war to bring out whatever they have to. And print as much money, print money into oblivion, because they will pick the death of the currency before they pick the death of the bond market. They will pick hyperinflation before they pick a deflationary collapse. Every time. It happens every time throughout history, because a deflationary collapse will cause the government to suffer. Hyperinflation only causes the general population to suffer, and they will pick themselves over you every time. Learn this. Buy gold, buy silver. Do not let this happen. McDonald's is cutting corporate jobs right now. So even the $3, $4 burgers, those people are suffering. The people selling $3 to $4 burgers, this is cheap food, and they're suffering. The economy is toast right now, guys. Difficult discussions and decisions ahead. Guys, if McDonald's is cutting jobs, everyone's cutting jobs. McDonald's is supposed to be like a cheap place to get food. People are suffering and they can't get the cheap food anymore. This is not good. This is not good at all. So like I said, what did I say? Yeah, I shorted silver and I made good money doing it. But look at this. This is your key to success. They're going to pick hyperinflation. Whatever happens, 2008 is going to happen. It's going to be worse than 2008. We're going to have a deflationary collapse. They're probably going to sacrifice a couple of banks while they do it. But the point is, people are going to get bailed out, and it's going to be economic stimulus like you wouldn't believe it, okay? That's going to be very inflationary. Your dollar is toast. The US dollar is toast. The Canadian dollar is toast. The euro toast. The Great British pound is done. Guys, learn about this. Get your hands on some metal, something of value, not the dog shit fiat currency. That is your only way out of the system, out of the matrix. Even if you have $1 million in your bank account, that $1 million won't be worth anything soon. Okay? Get your shit together. For the love of God. But this was a good trade, guys. I actually sold out around here. I know my original target was 22.90, but it's whatever. Anyways, love you guys. Peace. Stay blessed and get some silver. Bye.